So I've always been more of a dabbler when it comes to stock picking. Like most people who started out, I read the Benjamin Graham and the Buffett books. Then I read the second book by Peter Lynch called Beating the Street, and he talked about his process for researching stocks, and it was talking to company management and looking at supply chains. And I realized, like, whoa, maybe this isn't for me. I don't know if I want to do all that work to really sink my teeth into it, understand these. That was the first one that really gave me pause. And then I worked in the institutional investment manager field, and I was working on manager selection, picking the managers that try to beat the market, right? I did this for the first 10 or 12 years of my career. These portfolio managers and all their team of analysts, they all did an insane amount of work on these companies. These are all very highly educated people, right? Very smart, like forensic level accounting detail on financial statements. They're talking to competitors. They're looking into the supply chains. They're speaking with management on a regular basis. They knew these companies inside and out. And then we get to the performance, and almost all of these managers underperformed. They still couldn't beat an index fund. And there was a very small number of firms and funds that actually did outperform, and it wasn't consistent. And regardless of the amount of work they put in. So I just learned firsthand, stock picking is hard, and so it's always been a relatively small piece of my portfolio. One of the reasons I've been scaling back is just because it was causing too much brain damage and mental bandwidth. I always say that investors spend 95% of their time worrying about things that happen like 5% of the time. And I think the same was true of my stock picks in my portfolio. I was spending 95% of my time worrying about the stuff that took up 5% of my portfolio.